Something very unusual is happening with XRP, and almost nobody is talking about it. Not retail investors, not influencers, public companies. And by the end of this video, you'll understand why this shift changes how XRP is being positioned inside global finance. Think about that for a moment. Hello, welcome back. In today's video, we're going to zoom out and look at a quiet but important development: corporate XRP Treasuries. Not speculation, not hype, real balance sheet planning. And once you see this clearly, you'll never look at XRP the same way again. A new phase in digital asset adoption is unfolding. Recent disclosures show that multiple publicly traded companies have announced XRP Treasury strategies with combined commitments exceeding $2 billion across different sectors. That alone should make you pause. Wow. Now, this does not mean every dollar has already been deployed into XRP purchases, but it does confirm something critical. Corporations are beginning to treat XRP as a strategic reserve asset, not a short-term trade. That distinction matters more than most people realize. This marks a clear transition away from retail-driven enthusiasm, people like you and me buying tokens, toward institutional balance sheet planning. And when balance sheets move, markets don't react emotionally. They adjust structurally. Let that sink in. Since 2024 and 2025, a growing number of public companies have started adding XRP into their treasury frameworks. This mirrors what we saw earlier when companies accumulated Bitcoin as a reserve asset to diversify capital and gain exposure to emerging financial infrastructure. Different asset, same institutional logic. What makes these XRP Treasury strategies especially interesting is how they're structured. We're seeing official public disclosures, allocation of corporate cash or raised capital, long-term reserve positioning instead of trading, and in some cases, direct integration with payment or settlement systems. This tells us XRP is being evaluated as infrastructure, not just a token. As of early 2026, at least 8 publicly traded companies have disclosed XRP Treasury initiatives whose combined planned allocations exceed $2 billion. Some targets are measured in billions, others in hundreds of millions, and several more are rolling out smaller but highly strategic reserve programs. Collectively, this is one of the largest coordinated corporate treasury movements involving XRP so far. Wow! Here's an important detail most people miss. Several of these programs are still in rollout phases. That means announced commitments may exceed current holdings. In other words, intent has already been declared, even if execution unfolds gradually. And in institutional finance, intent often leads price, not the other way around. So why are corporations considering XRP as a reserve asset? Companies point to fast settlement speeds, diversification away from traditional cash reserves, participation in blockchain payment ecosystems, and potential financial infrastructure opportunities. Some firms even plan to integrate XRP directly into operational payment rails and settlement workflows. This is about utility, not excitement. Earlier crypto cycles were dominated by retail speculation: fast money, fast emotions, fast exits. Corporate treasury adoption introduces a completely different dynamic. Balance sheet demand replaces trading demand. Holding periods become longer. Sensitivity to short-term price swings decreases. Market behavior begins to change at a structural level. Think about that. Quick pause here. If this explanation is helping you see the bigger picture, thank you for watching and for supporting the channel. A like or share helps this kind of calm, clear information reach more people who want understanding, not noise. All right, let's continue. In simple terms, large companies are starting to treat XRP like a strategic savings asset instead of a speculative coin. Capital is being set aside long-term. Business systems are being built around it. Investors gain exposure through regulated public companies. This represents a move from people buying a token to organizations planning financial strategy around it. For existing XRP holders, institutional treasury adoption can have several potential implications. Public disclosures increase credibility. Long-term reserves can reduce circulating supply. Institutional infrastructure improves liquidity, and expanded real-world utility strengthens the underlying network. However, announced allocations don't guarantee immediate price impact because capital deployment is often staged. The broader signal here is bigger than XRP alone. After Bitcoin and Ethereum entered institutional portfolios, companies are now exploring utility-focused digital assets tied to payment networks and settlement layers. This suggests digital assets are increasingly being evaluated as infrastructure components, not just financial commodities. If regulatory clarity continues to improve, especially through frameworks like the Clarity Act, companies gain legal certainty. When rules become clear, institutions can deploy large capital without fear. And when institutions move with confidence, markets shift from speculation toward infrastructure. So the real significance here isn't only the size of the money involved, it's who is moving it, how it's being positioned, and why it's being held. Retail interest can spark momentum, but corporate treasury adoption reshapes legitimacy, liquidity, and long-term positioning. Thank you for watching and for your support. If this trajectory continues, the true impact of XRP won't be measured only in price movement, but in how deeply it becomes embedded inside the operational and financial frameworks of modern enterprises. See you again very soon.